Hello traders everywhere, Hewison here with your midday market report for Wednesday the 24th of July. Well, Apple rocks the boat of after hours earnings and selling more iPhones than anyone had ever predicted. We'll be looking at that stock today. We'll also be looking at a big stock, AT&T. Yes, that's right, AT&T gave a major sell signal today, and we're wondering why that stock is not doing better. We'll also be looking at gold and why the 1340 level could be a very important reversal for this market. So let's get started right away. Okay, we're at our portfolio page and we're going to start with the Dow as we normally do, but we'll also be traveling down to Apple and AT&T. So let's get started right away. As you can see, we have 3 trade triangles on the Dow, on the S&P 500, but just 2 on the Nasdaq. So looking at the Dow, we have a couple things going for us. We have obviously all of our trade triangles very positive, but I'm a little discouraged the fact that the market has really sort of flattened out here for the last week or so. Still a little bit higher for the week, but nonetheless still flattened out for the week. We're above the 200-day moving average, which is right here, and also the 50, also the 10. What's a little bit concerning me is this. I'll show you what it is. We're seeing a little bit of slow momentum. You see this in the MACD moving down, and prices have sort of been inching up. Not really great, but not bad either. So the trend definitely is on the plus side with a plus 90, so the trend is up, but we may see some more of a consolidation pattern here at these levels, perhaps over the 1540 level. I think that's a level most people are looking at. Moving on to our next market, S&P 500. And as you can see, pretty much the same pattern, a little bit heavier here. We've had a couple of days there. Let's scope this in to a 3-month chart. And you can see we had an outside day here, which is a negative engulfing line. If we close lower today, that's confirming that this is probably a minor top, and we're likely to see some pullback in this market, much like the Dow. So going to the Nasdaq, Nasdaq is not performing that well. It is the lead performer, but if we just draw a simple trend line from these levels here, we should find support right around this zone. I would say anywhere between these 2 levels, we should find support. Trend is clearly up with a plus 85. A little bit of momentum loss, much like the Dow and the S&P 500, but the trend is still firmly on the upside. So let's move on to our next market. This is gold. I've already drawn this in. I want to share with you this because I think it's pretty important, and that is the Fibonacci. I put the Fibonacci in already. If you're not familiar with the Fibonacci, we have some courses online that you can take at MarketClub. It tells you about what this is. As you can see, we've gone from, I'm going to put a close only chart on here to make it simpler. I've taken it from the high close right here, and that was right around the 1419 level, to the low close here, that was the 1203 level, and we've sort of come back exactly 61.8% retracement. There's the number right there, 61.8%. This is a classic Fibonacci area of resistance. Now, if we cannot get through this area, and I think it's going to provide a problem for gold, I think we'll see this market come down to the 1300 level, maybe even a little lower than that. So let's watch that very carefully. Our longer term trend for gold still negative, intermediate and short term trend for gold positive. So let's just go with that for the time being, but let's be cautious and aware of the 61.8% Fibonacci numbers there in place. On crude oil is beginning to look a little bit heavy. In fact, we've taken profits at 106.55. It's 106.43 right now. We've taken profits because our short-term indicator, our timing for crude oil, is using the weekly and the daily. So we use the weekly for trend and the daily for timing. And if we put our dailies in, you can see, boom, they're kicked in right there. So again, we were out of this market, took a nice profit from the 97.82 level, and so almost $10 profit. Very happy with that. I'll take that money to the bank. Very, very happy with that trend. So let's go to our next market. Next market's the euro. The euro is a plus 90 strong upward trend. We expect this trend to continue. We're seeing a little bit of profit taken. The major area of resistance, as we mentioned in our report, is going to be this area right here, and that's right around the 134 area. We would want to take some money off the table if we get to that level. So this is what we are calling right now resistance, and that's at 134. So I said we get somewhere up there, I'd be inclined to take some profits on that position. So let's see how that plays out. Generally speaking, though, the trend is up, and we expect this market to continue to move higher. This is Apple. As you can see, we've got both our intermediate and short-term trends are both positive. However, the long-term trend is still decidedly on the downside. You do have some things happening though that I want to share with you. One is if we close over this area here, the 131 area, 132 let's call it, I think that would be a good sign for Apple. Plus you had a potential of the 10-day going over the 50-day moving average. That'd be another indicator. I put these moving averages in here just today to show you. So this is a 200-day moving average. Kind of gives you the big picture. This is 50-day and this is a 10-day. Now you can see all these here, they're all listed here, the colors and what they mean. So again, it looks like it's crossing over very soon. We could be crossing over. That would be a first indication that we've seen since this level. We went below it here. So I think that's definitely something to watch very carefully. The other thing is this is still in a positive mode. So all we're looking for now is the monthly trade triangle to kick in and go green. Now, again, that's going to kick in, I would say, around the 460 level. That's a big level we're looking at. So that's a key level to watch in Apple. So let's see how things play out. But they did sell a lot of iPhones and have a lot of new products coming this fall and next year. So I think that's going to be a very big plus for Apple. If you haven't seen, by the way, if you haven't seen our in-depth analysis of Apple, check it out. Now this is AT&T. Interesting, a couple of things here we looked at. One, again, we have our moving average. This one here. This is the 200-day moving average right here. 200-day right here. And these averages are beginning to look a little bit dicey. We're turning back down on the 10-day and we're going to be turning back down on the 50-day. Also, this is the one to watch, the MACD, the MACD. If this turns down, it's not going to be a good sign. So how far can AT&T drop from these levels? Well, certainly I could see it going back to the 33 level. Not a big move, but something to be, it's a big stock. It's held by a lot of people, and it really hasn't done a lot in the last. If we just scope this out to a max, you'll see. But you can see this could be a very pivotal point for this stock. And by pivotal, I mean we have the potential of a double top and a pivot point. If we go through this level here, then I think we could go quite a bit lower. Certainly maybe down to the 30 area and maybe 28 area, which takes you back really where support is, long-term support is for AT&T. So, hey, this is Adam for MarketClub. Thanks for stopping by. I hope you enjoyed today's presentation and check out that Apple video. I'll see you next time. Have a great day trading.
You can find Adam Hewison as a regular contributor on Bloomberg, Business News Network, CNBC, and Fox Business News.